3%, prior 0.2%, with a range of 0.4% to 0.2% expected. Range of 0.5% to minus 0.2%. We also get the weekly US initial jobless claims number, forecast 210K on the prior 201K, with a range of 220K to 195K expected. As well as this slew of US data, do you get the Canadian GDP data as well? Quarter over quarter annualized, forecast 0.8% on the prior minus 1.1%, range of 1.3% to 0.1% expected. The GDP month over month, forecast 0.2%, prior 0.2%, range of 0.3% to 0% expected.
Hey everyone, good morning. We've got PCE data coming out in just about 3 minutes here. Year over year expectations of 2.4%, month over month core expectations of about 0.4%, year over year core expectations of about 2.8%. It comes in much hotter than expected. I do think we see rates rise and risk pull back. And there are some expectations here that we may see a reacceleration of inflation. And we've seen a little bit of that, clues of it in CPI, in PPI, in services PMI, manufacturing PMI, home prices, the number of small businesses that are talking about raising prices over the next 3 to 6 months. There's a lot of sort of inflation in the pipeline, so to speak. So we'll be watching this release pretty closely. Just about 2 minutes left now. Also have Financial Juice is live market commentary to break the news as it comes out. So that'll be on the stream for everyone to hear. And I'll be talking more about the market reaction in the S&P, the NASDAQ, the Russell. We'll also look at rates in terms of note and bond futures as well. We do see a relatively large level of resting liquidity at the bid right around Gamma 1, which is going to line up with 50-50 on SPX, where there's a large level of interest in options. We also see a large level down here.
1 minute remaining. I'll lead with the US PCE price index year over year.
Then we have a fairly large level of resting offers above as well.
Claims PCE price index.
So we have the liquidity now thinning out. You can see that in the heat map here. It's kind of gone dark. This is why it's dangerous to trade these events, because you just don't have that liquidity there. So you could have much more slippage, much less ideal fills.
Ten seconds.
We'll zoom out just a little bit to see more of that liquidity across the board.
Jobless claims, 215,000. The consensus 209,000. Continuing claims 1.95 million is ahead of the 1.874 million estimate.
So pretty much another month of
2 spot
jobless
4%,
claims.
2 spot 4% as expected, month over month. 0 spot 3%, 0 spot 3% as expected. The core PCE year over year is
Personal
2 spot
income
8%, 2 spot 8%
versus
as expected.
+0.4%
Month over month at 0
expected.
spot 4%, 0
Personal
spot
spending
4% as expected.
2%.
Consumer spending
That's
0
in line
spot
with
2%,
estimates,
0
waiting
spot
for the
2% also coming in
PCE
as
data.
expected. Jobless
Still
claims
not
for the
out
US
yet.
215k, 215k. Higher than forecast, 210k. For Canada, the GDP quarter over quarter at 1.
So I'll just hop in here. I think PCE coming in line and lower than what was potentially expected at 0.4% is being received as positive by the S&P 500 here. We do see a pretty decent bid on reasonable pre-market volume, bringing the cumulative volume delta back into positive territory here. There is a little bit of selling pressure. We see the liquidity differential favoring sellers here, so there's some absorption as we get to yesterday's midpoint. But overall, this economic data is being well received by the market, in that PCE did not come in higher than what was potentially expected, coming in month over month at 0.3% at the headline level. Core PCE coming in at 2.8% year over year, also matching the actual. Consumer spending month over month coming in at 0.2%, also matching the forecast. So pretty much everything with PCE coming in line. Market's breathing a little bit of a sigh of relief. We can see that in the NASDAQ, which had an even more robust pop than the S&P. The Russell 2000 also seeing a pretty big jolt. And then we can see it in rates. The 10-year note getting a bid, the 2-year note getting a bid, and that 30-year bond getting a bid. I'm going to imagine the euro has a bid on this as well. Dollar is weakening. It's dragging that point of control higher. So we see that across the board. A pretty decent amount of positive reaction to this as markets try to build up into this large area of resting liquidity just around 50.95 to 5100 on ES. So pre-market, we've gone from an implied open that would be down about 0.3% to an implied open that's up about 0.12% here. We see the NASDAQ just consolidating after those gains, some selling pressure coming in. We did talk about a little bit more. We can see that in the liquidity differential here. Sellers getting more interested on the order book as we saw that pop. Let's take a look at oil here. Oil also relatively bid here. Not necessarily a reaction function to that news, but still seeing some folks adding into oil positions. And gold getting a decent pop as rates and the dollar come down. Someone asks, isn't as expected positive? I would say that the initial reaction would suggest that indeed it is. And I would think that, we have to kind of see how we trade this through the cash session. But for all intents and purposes, this is a pretty decent initial reaction to the data, and not just in stocks, but also in currencies and in rates. So let's take a look again. We see still there is that relief in 10-year note futures, and there is that relief in the euro, though that's coming off now.
And so just to recap,
we're
those
seeing that reset a
PCE
bit.
Inflation numbers then. So again, the core year over year as well as the headline at PCE year over year, both coming in as expected. However, we are noting prior downward revisions to the month over month reads. So 10 basis points negative revision on core PCE month over month, as well as PCE month over month as well. Again, looking to the markets now, Dixie's flat on the session, which has paired some of those gains. S&P is extending gains up to 0.3% now.
Implied open for S&P cash would be 50.75.
SPRC SciSpark delivers treatment for autism spectrum disorder clinical trial, enabling commencement of dosing. That's Sandy Papa Romeo Charlie, SPRC.
And we do see interest continuing to build after that data release. We can see price pushing into this large area of resting liquidity above
S&P
us.
futures now at 50.9225.
Later this morning, we'll get Chicago PMI at 9:45 a.m.
Spiking on that.
with an expectation of 48.1, as well as pending home sales. And we'll get some more Fed speakers because there's never enough of that.
$4.95.
So we did see a big drop in goods spending. Looking at PCE, I'm just zooming in on some of the data. And the decrease was largely cars, which we saw in retail sales as well. And we saw a big rise in services led by housing, utilities, financial services, and insurance. Just posting those charts on Twitter for anyone that wants to take a look at some of the latest data that just came out. Taking a look here at unemployment claims, just seeing if there's anything of note here. They usually take a little bit to post this on the DOL website. We just got that up. I like to look at the delta between non-seasonal and seasonal adjusted, and so we've seen a bit of a flip there. Non-seasonally adjusted claims are now coming in lower.
Continuing higher on that economic data, 50.9125.
And so that delta between initial and seasonal adjusted claims, about 20,000 jobs. So we kind of saw that flip earlier this year and late last year. Non-seasonally adjusted were quite a bit higher than seasonally adjusted. Now we're starting to see that balance out. So jobs market remains robust. What can we say? There is still a really significant amount of labor growth in the pipeline there in terms of wage growth coming in at 0.6%. So that's still a little high. That still adds some pressure to services. So it's something that remains worth watching, although PCE coming in the way it did gives the Fed and market watchers a bit of room to breathe a sigh of relief here. This is ostensibly better than expected data, in the sense that, you know, when we looked at Goldman and Bank of America and Bloomberg, they were all looking for 0.4 or higher on core, and we didn't get that month over month. Checking on the NASDAQ, showing some strength versus the S&P here, as the S&P is sort of consolidating. NASDAQ's trying to make new highs. Russell showing a similar look, a lot of excitement there. Gold pulling back just a little bit. Crude continuing to build on its move. 2's pulling back, so rates moving a bit higher. 10's pulling back, similar story there. 30's pulling back, so rates moving higher again after that relief. And the dollar basically not really seeing much of a change now. The euro is what we're seeing on screen. It popped, then it dropped. Now we're basically back to where we were before the data release. S&P continuing to build. Seeing a push into this large area of resting offers, this liquidity above we're seeing in the Bookmap heat map here. Cumulative volume delta continuing to push higher. We do see some absorption into this strength as that liquidity differential favors more sellers on the order book. So overall, I would say decent data release. It definitely helped the equity markets.
Gene Therapeutics announces TS.
Whether or not it really has staying power in the cash session is a different question. We don't see that translating as much into rates and into currencies, which I think would be helpful. Those intermarket dynamics, you know, seeing a falling dollar and falling rates ahead of the open and during the trading day would be much more constructive. So we'll pay attention here. We'll see if this pop has legs as we get into the regular trading hours here. But I'm going to hop off the stream. I want to thank everyone for tuning in. Hope this was helpful to you, and I'll be back later.